Hey there, this is Taylor with Hack & Company at Remax River City, and I am here with one of our trusted experts. So in the news this week, we're hearing all about how mortgage rates are reaching historic lows, and here we have the legendary and talented Cheryl Wilkes. Now, you're from DLC Brokers for Life, is that correct?
Yes.
And mortgages, you've been around for a long time. We've been buddies for a long time.
Yep.
And what I think that most people would know you related to is a lot of investor work. You work with
Absolutely.
a large pool of investors. The Real Estate Investment Network recognized you as a Broker of the Year, which is fantastic. And we always try to get the most credible experts in here to comment to our clients and also the people we like to play with, right? You always want to know when you throw the ball that you've got a good receiver. So thanks so much for being part of our team, and thanks so much for coming out with us. This has got to be a crazy rally for you.
I think that's probably like a soft way of putting it for the 2020 year for sure. Yep. Interesting.
Yeah.
We'll go with it.
So when June hit and the first shutdown ended, because right now we've just received the announcement for the next shutdown. And originally that was something that it was just like the unknown, right? And then it was like the floodgates opened in June. All of a sudden, we see just a huge number of transactions. It's like they moved the playoff season.
Yep, 100%.
So that was how you experienced the market as well. And you guys have just been making announcement after announcement. Like interest rates are getting better and better. And what did we see this week? CBC News says that mortgage rates are an all-time low.
Yeah, absolutely.
And let me get this right. So one, you know of this, and two, you have some inside information that you're like big announcements here, right?
A little bit, yeah. They basically have kept it quite quiet. So HSBC in the last couple of months has been in talks with Dominion Lending Centers as a corporate, all of them. So basically straight across the country. This next coming year, we exclusively Dominion Lending Centers and their ownership partners, there's a couple other brands involved, will have exclusive access to HSBC. So the only way to reach these guys will obviously be right now the same way that some people do is, walking into a branch. But if you want to be dealing with the broker channels and chatting with brokers, we all will have access to them, which is a huge win for the DLC network, especially with stuff like this, like you noted. They're posting insanely low rates right now, and they're really, lowballing, I guess you could say, some of the other big five banks. So.
And we've seen this before with maybe some banks that are looking to build portfolios for maybe a purchase, right?
Yep.
And interesting to see them moving and shaking as we enter into this new climate, because there's a lot of businesses that have had to react. Now, what does this mean to the people in our marketplace coming next year when this partnership takes place?
So, even right now, with or without the HSBC partnership, right? Right now, people even that signed mortgages 2 and 3 years ago, of course, strategically, of course, don't really want to pay penalties to get out of those mortgages. But the amount of people that we've been chatting with this year, even since the shutdown in March, when everything started sliding rate-wise, I've had loads of people reaching out saying, hey, is it smart for me to switch my mortgage and get a lower rate? Sometimes those penalties are disgusting. Don't get me wrong. It does happen. And they decide financially it doesn't make sense, right?
But it's all just money, right? So what we know is you're looking for a return on investment. So the return on investment of the penalties, it's juice for squeeze, right? That's the easiest way to put it.
Yep. And the thing is that I literally haven't done one yet where the option for savings wasn't higher than that penalty. But for some people financially, it hasn't made sense to come up with potentially paying out some of that penalty, out of pocket, right? But
see, that's the thing I find so interesting.
Huge money people are saving.
Yeah, because it seems to be that these rules kind of float. Like if we take a look at mortgage documents as a whole, we're often seeing these penalties that are if this, then that, right?
Right.
So basically they're summarized by most commonly, what do we see? Like 3 months interest? Is that pretty common?
For all the variable rate mortgages, the fixed rate mortgages can be a bit more steep, obviously, based on interest rates today and the interest rate your client signed at.
If this, then that part.
Yes,
so they're normally 3 months interest, but there's like a complication in there. And am I explaining this right when I say that the complication built into those contracts are a fail-safe? so that it makes it more expensive to break your mortgage if there are better deals in the marketplace?
It's case by case with lenders. The calculation on all of the fixed mortgages has that rate differential type piece built into
Yeah,
them
but that's the
always.
theory, right? The
Yes,
theory is to
yeah.
essentially disincentivize people that would break their mortgages, because imagine when the market moves down, if everyone broke their mortgages at once, the banks would falter, right? Like if their
Oh,
entire
totally.
book shifted down. So they put
Yep.
these little like trap doors in it, if you will. Now, taking a look at that, what you're saying is that these trap doors are normally often made for their own institution. Whereas if you're switching, it could be that where the posted rate is, it changes the calculation. So then in that case, once you measure, it could be a better deal.
Absolutely. Yeah. And I mean, we've had people this year saving tens, 20s, $30,000 in 2 years, right? They're 3 years into a
Just
5-year
in
term and
interest rate
breaking that
savings.
penalty just in interest changes and just cash in their pocket with the lower payments overall, right?
So imagine
And
that for these
yeah,
families that are experiencing hardship under our current situation. Like we've seen
yep,
a lot of people that have had their income shift.
yep,
Now, let's do some math here, because I think that the average household income in the Greater Edmonton area is somewhere around that $85,000 mark, right?
yep, yep,
And so if you
probably.
were saving somebody in that $20,000 range, that would make up more than 20% of their income.
Yep.
Whereas the average family in hardship, they can't withstand 5% change in their income. Like that's what we've noted as oil has gone down. So
Yep.
right now, there could be families that maybe know somebody or are listening to this right now that know someone that may have had a challenge. Now,
Yep.
you might think, oh, if somebody lost their job, there's no way that they would get a mortgage. But that's not my experience, right? Like
They do.
RBC just released their home sentiment survey where they were talking about
Mhm.
home buyer sentiment. And what they
Yeah.
found is of all the parents that were surveyed, there was like a large percentage, like 25%, that gifted a portion of the down payment to their kids.
Yep.
Like there's some ways to make this stuff happen. And often it happens in your office, right?
Yep.
Like how often does somebody come in and just as presented is what it ends up being?
No. maybe 25% of the time at
So you're
best.
saying if you see that client, you're like, hey, is that a white horse? And you're like, I've never seen a white horse with a horn before.
It's good.
Have you seen one with a horn? My chair's losing it
Unicorn
here.
really is a word that doesn't pop up very often. We joke about it. We're like, where are the easy deals? No.
Yeah, totally. So when it comes down to that, understanding that I don't think that our audience knows in general, but I've done a few mortgages, like,
Yep.
millions and millions. And in that, we like people that do this job understand that you are the factory that takes the real world and whispers it to the bank.
Yep.
Right. And I think that it's such an illusion out there that the best mortgage broker has mysterious rates that others don't.
People,
I don't think that that's
yeah.
true. Like, so from your standpoint, if you were a pro recommending a pro,
Mhm.
what is that foremost skill for mortgage brokers that makes them valuable?
Honestly, I can say the communication, the feedback, and the knowledge base right now has been the big one. Every time we blink, let's be honest, for about 3 to 5 years now, they're changing their minds on programs, qualifying, stress testing, who does what, who's comfortable with what. Every lender has a slightly different threshold of what we jokingly call risk, right? Because mortgages have always been based on how much risk or reward are you as a client. So from that perspective, especially with me dealing with lots of like investors, rentals is like a can of worms. Everybody's got a slightly different view on how they will look at a rental and how risky is it and all kinds of moving parts. So it's one of those things that in the last year or two, if you're new to the industry and you're trying to learn what every single lender does, and it's not one or two, it's like 20 or 30 different protocols, you're drinking from a fire hose trying to figure out what 3 of them do. Like, we joke about it, but I feel like I should be emailing half these guys every 3rd week saying, did you change anything on me? Did you change anything on me recently? No? Okay, I'll bug you again in 2 weeks.
Because there's no way to understand that. And the
No.
reason that I think that many people don't understand is it's not just their policy, it's how they interpret it. Like that's what
Absolutely.
underwriting is. So when I
Yep.
look at it from the outside, like why I say my clients should definitely talk to you is due to the fact that you're able to take a regular situation and say, hey, listen, I think I got a puzzle piece that'll fit this in the back.
Hmm.
And then you go, but a lot of the time it's a working it. It's like coming
Yeah.
back to somebody and saying, hey, listen, I know that somebody in your family just lost their job. Who around you wants to help you? Right?
Yeah.
Like, is there somebody around you? And then somebody's going to say, you know what, my dad, like, I don't know if he could be helped. He's retired. And then you're
Yeah.
like, oh, retired. Hey, let me go to the back. And then off you go. And then you grab another piece. And a
Yep.
lot of people don't understand that it's not just like Blockbuster Video. Because if it was, a lot of these lenders, like if it was just pieces of the puzzle, it would be done entirely by computers.
Totally.
But
Yeah.
the things that make it real are what they need to understand. They need to understand that, you know, Bill's income is way different than what they think it is because of the seasonality of his job.
Exactly.
And so you're taking that raw information and then you're talking to the underwriter, and there's two things that happen. One is explanations, because they need to be able to meet their protocol. So you almost need to give them those puzzle pieces you got and said, hey, listen, I know that normally you don't do this, but if you take into these three considerations, doesn't it fit this odd one exception over here?
Yeah.
And then they're like, okay, I can take that to my senior, right?
Yeah.
I hear
Exactly.
what you're saying. And then the
Yeah.
other thing is to sell them, right?
Of course.
And
Yeah.
this is the thing that I don't think anybody else can see from the outside is you got it. Like when you get on the phone with somebody, if they got something that you want, it'll be a really hard way for them to say no to you. You make good arguments, you present cases well. And so in that situation, I think that there's a lot of people, and we see it on our side. So we'll see somebody come to us and they'll be like, oh, Janice is taking care of us. And we're like, awesome. How's Janice doing? And they're like, well, Janice is the lady that just works in the bank. And the question I normally ask after that is, you know, does Janice only do mortgages? And then the other thing is Janice available on the weekend? Because my clients are writing offers on Friday night, right?
Exactly. Yeah.
Like I think Dora was talking to somebody at like 10 last night. And so
I've talked to Dora, I think at 10 o'clock at night.
and that it probably was with the same person. But
Probably.
it's like this weird world that we're in right now where this is like kind of what it takes. And so when we write offers, we know they come to you right away, but we often apologize when we're delivering you things because we're like, hey, listen, somebody started off somewhere else. Now they found some place that they love and it's on the line.
Yeah.
You have 72 hours, right?
Yep.
And we really appreciate that you do that clinch work for us. But talk to me about like some of those things that people don't think can be done right now that you are doing.
One of the big ones that seems to be hit and miss with, you know, when they're going to talk, like you said, they're walking into the branch and chatting with somebody in a bank has been the child tax income. So we're watching that pop up with literally now everybody has picked it up that they are allowing it now. That sometimes is the difference between the townhouse and the duplex, right? It can be $300 to $500 a month. Somebody's getting $800 a month, right? I mean, everything in the lending world is based on your affordability of your total income. So if your total income is $6,000, $8,000, $10,000 more per year, including that, great. Like that can be that differentiating piece about what kind of home that person can buy. And especially with where we are right now, where, you know, we all kind of joke about it, but let's be honest, we're all seeing it posted on social media. Most people are realizing where they live is probably a little too small for their needs. So, I've had tons of phone calls since the first lockdown from people going, maybe we should upgrade, and I'm going, yeah, that's a great
Like this place was awesome when it was at 30% capacity most of the time because everybody did stuff outside. It was gone. You know, the families that are really feeling the crunch right now are those families with kids that got sent home from grade 7 to high school.
Totally.
Right? Like if mom and dad are trying to work from home and now they've got like, Billy in the neighboring room screaming stuff that is really appropriate in Call of Duty and really inappropriate when it comes to your Zoom meeting. These
Totally.
things are like the struggles that we're hearing. And when you're talking about like, so a lot of people, when they're like, oh yeah, this is all nice, but that doesn't really make a big difference. The thing that it might do is move you over the cusp of the condo doc. So we see this all the time.
Yep.
Like right now, can you kind of give it off the hip and tell me $10,000, how much does it cost at a reasonable mortgage rate? I know it's not a guarantee, but it used to be around $50 to get 10 grand, $50 a month.
Yeah, it's a little lower than that right now. It's kind of closer to sort of like 40-ish we're finding with these nice low rates.
That's
so
incredible.
I mean, that's generally what I tell people. Like, to get from 3 to 320, we're talking maybe $75, $85 a month in difference in payment. Well,
yeah,
you know better than I do. 20 grand in house can be the difference between the dump dive and the place that just got renovated.
Well, here's what I see. So like, imagine that you're in a price point in that, like, let's say you're shopping on the south side, maybe you're looking in that like 3-ish range.
Yep.
You're going to see some apartment style condos. And
Yep.
those might just be your thought of being like, oh, that'd be terrible. That'd be the last place we'd want to end up. We got too many kids for that 2-bedroom, right?
Totally.
And you'll definitely be able to move to that like mosaic 2-story kind of townhouse with the garage in the bottom, right? Like that would open up to you, but you would also need to facilitate the condo fees, which is what you guys take into consideration, right?
Exactly.
So now with these interest rates having dropped and with them using things like child tax, because we're talking to a lot of families that have experienced disruptions. Yep. Like we all know that financial hardship could leave some relationships in a position where they change.
Absolutely.
And so then if you're going somewhere with your kids and you might end up in a townhouse instead of that condo, that's a huge upgrade. And then when we do this kind of math and Cheryl says, listen, I can get you another 20 at payments that will fit because we're verifying this. We're not going to let you guys hang out, right? All this stuff is double checked.
Exactly.
What you can do and what you should do conversations here.
Of course.
Then they come back to us and we say, listen, duplexes don't have condo fees. Condo fees are taken into consideration with Cheryl.
Yep.
So now look, this child tax benefit that she just kind of unlocked for you is going to basically move you into a duplex where you're sharing walls with less people. You get more space. And if you take care of the lawn, you don't have to pay somebody with WCB to do it. And that's what condo fees can boil down to.
And a lot of people have pets nowadays. There's way more people with dogs. You get the backyards, the no condo restrictions. A lot of young people I'm chatting with are like, maybe don't have kids yet. They're thinking about that. So they are looking at that kind of mosaic, like you mentioned, that seems to, these guys like to build their, cookie cutter garage on the bottom and the house on top, which are, great layout for a first time home buyer, but they're also getting restricted on possibly pets. And then there's nowhere to put the dog outside that's fenced in, and it's inconvenient, right? And and it's like you said, I mean, it's really marginal sometimes, or even cheaper when you take out the condo fees and you add in the slightly higher purchase price range, right? And I mean, even from that $300,000 house where at $50 for every 10 grand, they were paying about $1,500 for that mortgage payment. Now we're closer to say 12, maybe 13. Well, that is the condo fee potentially, right? Like before, just in the savings and interest.
And we also want people to get into good examples of real estate. We talk a lot about here how we got to get you in at the right price to get you out at the right price. Yep. Because our market's been sliding and some of our clients have had properties that's sliding, right? However, a lot of them are upgrading, when you take a look at that. And so a sliding market is actually to your advantage. The idea is you're buying more of real estate. You should do it while it's down. But when you take a look at 2020 as an example, if these conversations didn't happen last year or the year before, if maybe you didn't have a remarkable experience with somebody who was super sharp, you now own an apartment style condo in Edmonton. And if you could own a duplex, that's a hard foul. Because the outcome of those two different property types here is very different. Like when you take a look at what's selling in our marketplace right now, apartment style condos, townhouses, and are not performing the same way that duplexes are. And those are not performing the same way that single family is.
No, not even close. And we're finding a lot of people, unfortunately, I mean, like you said, they're not performing and then they're just not selling as well. Or some people just can't afford to sell it because the market has dropped in prices on condos. And then they're coming to me saying, well, you know about rentals, right? And I'm like, yep. okay, well, can you help, at least like help? You know what I mean?
Oh,
So I
we
mean, I've had
never
a
do
couple of
that to you.
clients.
We never
No.
do that. We never say like, listen, we know you have a cousin that will rent this place and we know somebody who does multi-property strategy. Yeah, that's like a pretty standard call.
Well,
So
and I've had quite a few people where I'm like, here's the lease I use, and here's the application to rent I use, and like, here you go. Like, here's what I personally use for my own personal rentals. Like, you know, they don't have to use it, but I mean, sometimes they're forced into being landlords, even if they really don't want to be, and it doesn't make sense, or they can't, you know, the numbers are too thin for them to even be able to hire a property manager to do a lot of this, and they're like, oh, okay, maybe we'll do it ourselves. But
that's the
I
thing that
mean,
we run into the most is somebody who's saying,
forced
oh, if we don't
landlords.
sell it, we'll just rent it. Do you
Yep.
know a good property manager? And it's like,
Yep.
well, unless you have 5 rentals,
Mm,
this isn't going to be the numbers you're looking for.
no.
Like this will take 40% of your money. Like you
It's,
will,
and
you
it
will,
can be pricey. Yep.
oh, it's rough. So in that case, um, these things, I find that more people are starting to understand that. And we actually summarize them as like on purpose landlords. So those are the
Yeah, I
people
call
that
them
show
by
up.
accident landlords.
Yeah, yeah. And they're like,
Yeah.
hey, I've got this much money. Where do I get performance? Right. And we're
Yeah,
talking to
those
them
guys
about
are.
the fun stuff. We're talking to them about upsiding places, going out and finding that property that can have a basement suite
Yes.
and then maybe do the garden suite now. That's a huge
Yes.
win, right? And
Yeah.
that's what I also really like about how you build portfolios. So do you have anybody that you can talk about in general, but not specifically, maybe a family that has been moving their way through rental real estate with you?
Yeah. So oddly, funny enough, I actually like went for lunch with them a couple of weeks ago before all this lovely, you know, changes went through where you weren't allowed to eat with anybody. But they personally have picked up, oh, I don't even know, over the last couple of years, they've had some of their own business partners purchasing some stuff that I've helped with financing on. They've picked up 2 or 3 rentals and have, you know, kind of thrown in the legal suites, like you were saying, to add a little value. They did it with their own home. Personally, they put in a legal basement suite to
Yeah,
kind of help with
yeah.
the payments,
I
you
love
know.
this
But I
stuff.
mean, it's really common right now, and a lot of people are noticing that, you know, I mean, like you said, purchasing that bungalow or even something that's already suited, you got 2 tenants paying 1 mortgage. It's almost like your own little mini, not apartment building because that's multi, but it's the same concept, right? It's less risk if 2 people are paying rent over one. Then at least if you're vacant, you're 50% vacant, not 100% vacant, right? And I'm finding
And
a
these
lot of people like that concept. It's great.
this is the stuff that inspires me. I really love it when families are like, this is the business of being a family,
Yep.
right? Like our job is to manage our family's wealth, leave something to our children, show them what it takes, right?
Yep.
That your life doesn't have to be limited to a job.
Yep. And these
And
guys have even retired his wife. She was working
oh
full
yeah.
time when we first started. So she's now at home with their little one who's 4 and the cutest thing in the world. But I see posts all the time online. They're out like, you know, landlord, mom and daughter, and they're, you know, cleaning a rental or something like that. They self-manage everything they've got, but she's no longer working full time. So she gets to be the home mom that she wanted to be. He's still plugging away full time so that, you know, they can call me and I can still qualify them for mortgages because somebody's got to have a T4 at the end of the day, right?
Yeah, you
But
betcha.
they're loving it, right? I mean, they're basically, these guys are building their retirement plan for the long haul, right? They've got,
So these are the
they know what they
families.
want to get to, right? So
Okay, so if there's families that are listening to this that identify with that and they're like, how do we get into
yes.
this? How do we get started? Like, don't, so this is what we're talking about, like talking to a mortgage person that also knows lease agreements. Like like we talk about this stuff because we do it. It's not a
Yeah.
situation where you're providing a lease agreement service. It's a
Nope.
situation where you have rental property
Yep.
because you're into this.
Yep.
And those are the things that we want for our clients. I know that a client that we know and love has talked to both of us because they were a family considering, do we get another residential door or is it time to go with that commercial project? And
Totally.
like as you move around this monopoly board, eventually that question becomes houses or hotels, right?
Totally.
And so this is something that I get to hang out with your spouse with, the Mr. John Carter, responsible for somewhere just shy of $1 billion in commercial sales. The
Small numbers.
yeah. So him and I do some of this stuff like that hotel we had, and I really think that there should be more families taking a look at like what does a plan like this look like. We don't need to
Yep.
do it all in one run. But
Mhm.
that's something that we'll be looking to do as part of virtual events as we go
Yep.
forward. We'll definitely be reaching out to you in that regard. We love how you take care of our families that are either just trying to get it done or trying to get business done. I like the
Yep.
people that can do it both,
Yep.
because that's just been fantastic. Is there anything that you want to talk about with our audience? Is there any messages that you want to send, just given our current situation, or seeing what you see outside, whether they're business related or not?
Well, I think first things first, obviously, I hope everyone's faring okay through all of this, of course, right? I mean, I feel like it's one of those things where there's not enough people just asking, how are you? We went out of our way in March. I mean, obviously, March, April, and May in our industry was absolute. I don't even know what the right word is. I literally would end each day and just I felt so bipolar because
Oh yeah.
I'm talking to one guy who's just so excited to like save money and lower the interest rate, and then 30 seconds later, the next person's going, I just lost my job. I don't know
Oh.
what to do. I need your help. And it literally all day was like back and forth.
Mhm.
So Kelsey on my team was like processing the actual mortgages, doing the paperwork. And I was just funneling phone calls all day, every day for honestly, easily a month and a half straight.
Yeah.
And then we got on the phones with calling people just saying, hey, how are you? Everything all right? If you need anything, let us know. And of course, all of us in this industry, we're trying to pump out information to people as fast as we could humanly get it out there. So at least they knew that there was some options, right? So,
Yeah. Our
this
team
year
chose to
has
use
been
that
that, right?
shutdown. We made over, I think it was around 500 meaningful connections
Yeah.
with COVID financial resources.
Yeah. And it
So
makes
we put
it makes a
together all
difference.
of the information out there on where different types of people could garner help, because it didn't seem like it was
Yep.
in one place. And just
No.
went, and we heard some great stories out of that. We heard some great
Yep.
people that got access to help that weren't uncertain as to where to go, because a lot of people kind of shut down,
Yep.
and that was something that we hear. So even those families out there that are experiencing hardship, uh, they should know that there are some people out there you can talk to about options,
Yep.
and there are some situations where this stuff can change.
Yep.
And so
Absolutely.
we're going to put your contact information available in the video format of
Sure.
this. Everybody can find you on our trusted expert list because we see you all the time.
Yep.
And if there's anything that anyone else out there needs, please reach out to us directly. And thank you
Yep.
so much for joining us together today, Cheryl. I'm going to just slide over here to your contact information again before we break.
Absolutely. Yeah. And I mean, the main thing is, I mean, if for all these people, like you said, that are looking at potentially going to lower interest rates, I mean,
Mhm.
it doesn't take much to do some math, right? I literally through this, I built a calculator. You understand the nerdness in me and Excel spreadsheets. I literally have built a payout penalty Excel spreadsheet for myself because we've been doing so much of it, right? So it's one of those things where it doesn't even matter if we were the person you dealt with when you got your mortgage or you're just wondering. It doesn't take too long to figure out, what potentially you might be paying for those penalties to see if it's worth it for people, right? Because a lot of people are shocked at how much they can save, and like you noted, even with a little bit of bumps in the road, COVID and now back to work or things like that, like we're still getting that stuff approved, right?
Mhm.
So, it's worth a conversation for people who are interested
Absolutely.
for sure. Yep.
Absolutely. Well, thank you so much for talking us through what's been being announced out where we see it everywhere. And we
Yep.
really appreciate chatting with you. You have a
Anytime.
very great
Always.
afternoon, and we'll
You
talk
too.
soon. All right,
Awesome.
everybody.
Thanks, Taylor.
Hope you're doing awesome. Cheers.
Bye.